economy today and the U.S. economy. Are you worried about the U.S. economy? You think we're in reasonable shape today? And what about the global economy, Europe or China?
You know what I worry about? Since I cannot predict the economy, I worry about what we can do about it. That's one of the powers of owning a business and of the private equity model. Things can happen around. I don't know how quickly interest rates will go down. People have been dead wrong about this. Bookings at our companies, we have about 25 billion of revenues coming from our companies. They have been stable for the last 5 quarters. So there's nothing imminent that we see from a slowdown perspective. But what I worry about is predicting or planning for the worst so that your companies and your business can be prepared to absorb those shocks. In Q2 of 2022, that's when we first saw a big decline in bookings. Purchasing managers coming in, renegotiating deals, software deals not closing, even though the pipeline was there. And at that time, we did what we did during the financial crisis. We came back into our companies and we reduced the cost, expecting a lower level of business to protect your earnings. Those are some of the things that our industry can do and that we do as we worry about other factors that we can control.
So if interest rates go down as is expected sometime this year, will that help your business or does it make that much difference?
It doesn't really make that much difference. It goes back to your point about how buyouts have changed so much, especially in the software space, where you have 5 turns of revenue equity on the deal and 2 turns of debt. And when interest rates are high, you have other advantages. Interest rates are high because inflation is high. That means that the products you're selling to your customers, which are productivity enhancing, are worth a lot more. And you can participate in that value through pricing with your customers. When interest rates are high, the add-on acquisitions that your companies can pursue may be cheaper, especially if they're not that well run, and you capitalize on that opportunity. So it really, really, really is a wash.
So during COVID, you could raise money pretty much sitting in front of a TV screen because you weren't expected to travel. Now, people expect you to travel again. So how much of your time are you spending on the road, either looking for deals or raising money, and how much of your time are you spending sitting in investment committees saying do this deal or don't do this deal?
I spend about 70% of my time on what matters to the performance of our investors. And those are 2 things: helping our team buy more great software companies and helping our team operate those companies to success. Those are the 2 things. Young people in our firm especially are very interested in what our mission is. We sit them down, especially those that have just come in, and we say the following is our mission. People give us money.